Hello, and welcome to today's webcast, How the Treasury's Final Rule Impacts Tribes. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, now I am pleased to introduce today's presenters from the Moss Adams Tribal Services team. We have Tasha Repp, Partner and Tribal and Gaming National Practice Leader, Anita Shah, Partner, and Ryan Luetkemeyer, Senior Manager. Their bios and contact information are located in your webcast console if you would like more information. And now I'll turn the floor over to Tasha to get the presentation started. Tasha?
Thank you, and welcome everybody to our webcast on the coronavirus state and local fiscal recovery funds from ARPA, the American Rescue Plan. And today we're going to go over a number of the updates that Treasury made when they issued the final rule for these funds back in January. And we're going to cover all 4 of the eligible use categories that apply to the funds. So that'll include responding to the COVID-19 and the negative economic impacts, providing premium pay to essential workers, providing government services to the extent of reduction in revenues, and we have that in bold, and we're going to start with that one, and we'll tell you why in a second, and investments in water, sewer, and broadband infrastructure. And the goal today, again, is to really try to highlight the changes that were made from the interim rule to the guidance that now exists in the final rule. So as I indicated, the first thing we're going to start with is an understanding of the changes they made around the calculation for lost revenues and how to use it for government services. This is the most flexible use area, which is why we're going to start with it first. But before we get into what changed there, we have a polling question. Amy?
All right, thank you. So our first polling question, has your tribe performed an updated revenue loss calculation incorporating the changes in Treasury's final rule? A, yes. B, no, we have performed the revenue loss calculation. but have not updated it with the changes in Treasury's final rule. C, no, we haven't performed the revenue loss calculations yet. Or D, not applicable. And to respond to the polling question, please click the button next to the answer you choose and hit submit. And if you cannot see the submit button, please just enlarge the slide area.
And for those of you, go ahead, Amy, sorry.
No, I was just going to say I see some responses coming in through the Q&A. If you want CPE, you will need to make sure you submit it on the actual slide.
I was just going to say, for those of you that are panicked going, wait, something changed with the final rule, don't worry, that's what we cover on the next slide.
All right, it looks like most have submitted. So here are the results.
All right, so about 20% of people have updated their calculations for the final rule. A lot of people did a calculation based maybe on the interim rules that existed but haven't updated it for the final rule. So we'll talk about why it's important to do an updated calculation. For those of you who haven't done the calculation yet, we highly encourage you to do that. We'll talk about that again here in a minute, but the calculation of lost revenues allows you to use that portion of the funding you received for a really broad array of general government that doesn't have to meet the more stringent criteria in the other sections of the guidance, and we'll talk about how you can strategize around that. And not applicable, hopefully there's just some component units of tribes and other entities out there where the tribe's responsible for the calculation and the component units aren't doing their own. So jumping right into what changed on first the calculation of lost revenues. So a couple of really important changes. One is that Treasury is allowing tribes to elect to either allocate $10 million of the funds that they received as a one-time allowance and say that $10 million can be used for lost revenue, or you can go through the complete calculation to calculate what your counterfactual lost revenue was. You'll want to do the calculation either way to see if your actual results maybe exceed 10 million. However, if you received less than 10 million of total funds under the state and local fiscal recovery funds, then you can simplify your life, opt for that $10 million, and all of the funds that you received would be eligible to use for general government. If you're going through the actual Treasury calculation for lost revenues, there are a few changes that were made from that interim final rule to the final rule guidance. And both of them, I think, are favorable to tribes. One is that in the earlier guidance, they had said that the kind of standard growth factor that you could use had been 4.1%. They got some updated information. There's additional year's information that they were using to do the calculation, and so they increased that standard growth factor that you're eligible to use to 5.2. Again, you can calculate your own actual growth factor, and it may be something higher than 5.2, but 5.2 is the standard you can use without any additional justification. The other change that they made was the previous guidance was requiring you to do a calculation based on December year end. And we know there's a lot of tribal clients out there that are September year ends, which made performing the calculation a little difficult. It maybe wasn't in line with how you do your financial reporting or for a lot of tribes, their audits. They did revise the guidance to say that you can do the calculation either as of calendar year end or based on your fiscal year end. So for those of you that are September 30 year ends or June 30 year ends or something other than a December 31 year end, you might also want to update the calculation to, again, see which is more beneficial to you as the tribe. Once you make the election, though, again, it's got to be used throughout the course of this lost revenue calculation. is not intended to be performed once. It's performed on an annual basis through the funding period. And if that seemed overly confusing, feel free to reach out to us. We do have an Excel template that we can send to you that will help you with the updated calculations. So those are the primary changes that they made to the calculation of lost revenues. And again, the amount of lost revenues that you're calculating allows you to carve off that portion of the funding you received to spend on, oh, sorry, I'm a slide ahead. A couple more changes to the lost revenue calculation. In the previous guidance, it indicated that you needed to exclude utilities, and if you dug into the FAQs, some liquor store revenues, they've eliminated that requirement. So if you had backed out utility revenues from your previous calculation under the final rule, you're no longer required to back those revenues out. It did add a new requirement about if you've had changes to tax rates that you've made after January 6, 2022. Our template helps walk through what that guidance is. It does not apply to that first year calculation because it's only for any tax rate changes that you made subsequent to 2022, and everyone should be doing a calculation for prior years first. So it's only going to impact some of the future calculations that you need to make. And again, they did not make any changes to the fact that for tribes, your gross revenue calculation should include all of your tribal enterprises. So whether those are enterprise funds or component units, you're still required to include those gross revenues in your calculation because Treasury is recognizing that tribal businesses are a significant and primary source of funding tribal government operations. Unique to tribes. Again, for other governments that might be listening in on this, does not apply to other governments. So now, how to use that lost revenue. Again, up to the extent that you incurred lost revenues or that $10 million amount, you're allowed to use that portion of your funding for government services. And government services is really broad, and this is why, again, we want everybody to do that calculation first and think about how you might spend this government service piece first, because the criteria are really flexible, that you don't have to meet the guidance that Anita and Ryan will go over for the other project categories. It's really any service that's traditionally provided by the tribal government. It can include capital projects, it can include economic development and other general fund type programs and services. And it is the only eligible use category that can be used for matching or cost sharing. One other feature, I guess, of categorizing expenses as government services is that in the project and expenditure reporting framework that they have, this is streamlined. The level of detail that they require for expenditures relative to government services is not as detailed as the other project areas in those reports. So from a best practice perspective, what are we wanting to see? What are we encouraging our audit clients to do? Treasury's provided this really broad definition, but we still are highly encouraging tribes to document how you defined what government services are. We've got here a draft resolution. Some things may be fairly intuitive, but again, documentation is everything when it comes to federal grant compliance. As we learned through the Coronavirus Relief Fund, you heard all of the auditors say document, document, document. This is an area where we think there should be some documentation. It probably doesn't need to be overly detailed, but again, defining what you've determined are government services is an important part of just ensuring that that is really clear. So then how you might kind of think about how to apply this revenue that's available to use from the fund for government services. So in this example, if you received $12 million of the fiscal recovery funds, you could use $10 million. Let's say you're just using the standard allowance for government services. That means that other $2 million is subject to the more narrow criteria that Ryan and Anita will go over here in a minute. So the way to think about these government services, there's really two things that you could do with that. You could use your existing general fund budget, look at those expenditures, and cover some of those general fund expenditures with this state and fiscal recovery fund lost revenue for government services funds. One of the benefits of thinking through this is that these expenses are still going to be subject to audit. So you're still going to need to identify specifically what expenses you were paying for out of this lost revenue for government services category. And they still have to meet the uniform guidance criteria in 2 CFR 200. So that means it still has to meet the allowable cost requirements. All the stuff that you're used to following for uniform guidance applies to all expenditures paid for from the fiscal recovery funds. And so what we're encouraging tribes to do is to really think about what are going to be the easiest things from an audit perspective, so that if your external auditor for single audit is auditing them, it clearly meets those uniform guidance criteria, it's necessary and reasonable, all that good stuff. And if Treasury's auditors ever come in to audit it, it would also be really easy to justify an audit from a uniform guidance perspective. One of the benefits to this is that then frees up some budget space in your general fund to pay for maybe other costs. Now, again, you don't need to go that route. If there are new projects you want to undertake that don't meet the other eligible use criteria, say it's a capital project, for example, you can still use this general fund lost revenue government services portion of your funds to cover those types of projects too. But at the end of the day, just keeping in mind that anything that's getting paid out of this government services category is still subject to single audit and still has to meet those uniform guidance criteria. So when thinking about what uniform guidance criteria is going to apply, normally if you're covering costs from your general fund, you may or may not be following those same uniform guidance criteria. So we're wanting to make sure that when you're thinking about what types of government services to allocate to this portion of lost revenues, that you consider that, particularly as it relates to construction projects, that it will have to meet the competitive bidding and procurement requirements of the uniform guidance. It does not need to meet Davis-Bacon Act requirements as long as the project is solely funded with fiscal recovery funds. Clearly, if the project is going to be covered with part fiscal recovery funds and part some other federal grant funds, then Davis-Bacon applies to the entire construction contract. Uniform guidance would also indicate that for anything charged to the government services, you've got to follow the uniform guidance conflict of interest rules. The retention of records has to be retained for 5 years after all the funds have been expended or returned to the Treasury, and suspension and debarment rules also apply. So when you're thinking about what costs to allocate to this general government category, just make sure that you can document that it met any of the applicable uniform guidance criteria that would normally apply to federal grants. So again, hopefully all of you have an opportunity to really think about how to use that general government, but if you received enough money and your lost revenues don't cover it, Ryan and Anita are going to walk through the other eligible uses that you could use to spend the funds. Anita?
Thank you, Tasha. So like Tasha mentioned, we'll be going over the updates that occurred in the final rule for that Treasury updated. So in this eligible use criteria of these funds can be used for public health and negative economic impacts in response to COVID, here are some of the updates that occurred in this criteria. First of all, Treasury clarified that households and communities served by tribal governments are presumed to be disproportionately impacted by the pandemic. That means that you as a tribal government can provide assistance to households and communities without having to justify why you're providing the assistance. However, there is a catch to this. So for example, you can provide cash assistance to individuals without needing to go through an application process. If you may recall, under the CARES Act and the CRS guidance, you needed to go through an application process or individual needs assessment. You don't need to do that because they're presumed to be disproportionately impacted by COVID. However, you do need to document that the amount of assistance that you're providing is reasonably proportional to the harm caused by the pandemic. So in this eligible use criteria, Treasury put these words everywhere in the final rule where they keep talking about the assistance provided needs to be reasonably proportional to the harm caused by the pandemic. So I'll go over best practices in a second, but it looks like we have another polling question.
All right, thank you. So our second polling question, does your tribe have plans to provide cash assistance to tribal members with SLFRF? And there's a handful of responses. Please click the button that applies to you and hit submit. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions that we pull up.
So while people are answering this question, I want to make something clear. When Tasha was talking about the lost revenues related to ARPA, state and local fiscal recovery funds, or SLFRF, she was talking about specifically about these lost revenues calculated based on Treasury's calculation. But tribal clinics and tribal governments for their clinics also received direct funding from IHS, specifically for the lost revenues that they incurred due to the pandemic. And that's a separate funding that's from IHS. The funding that we're talking about today is Treasury's SLFRF funding. All right, so looks like we've got a good mix of people providing assistance. Most people did. There's also a huge amount of NA. All right. So if you did provide assistance, or if you're planning to provide assistance, some best practices here. So let's say you're providing assistance under the government services category that Tasha went over. Under that category, because tribal governments have a broad latitude on how to use that funding, as a recommendation, we would say, having a council resolution justifying the amount of assistance that you've provided, justifying why that amount was proportional to the harm caused by the pandemic would be sufficient. You can do an application form, but you're not required to. As an auditor, we'll always recommend more documentation, but that's not required, and you wouldn't be dinged by it or wouldn't be a finding by an auditor. Now, under this eligible use criteria that I'm talking about, that's in response to COVID, the public health and negative economic impacts of COVID, you can still do I would still recommend you do a council resolution justifying the amount of assistance provided. You can also do a survey or policy that justifies the amount of assistance provided, say, doing a survey saying the negative economic impacts that has affected the community or individuals. And then the application form too, again, not a requirement, it's a recommendation only. However, all of the assistance, whether it's provided under government services or under this other eligible use criteria in response to COVID, all of this assistance, all of these expenses are still subject to the uniform guidance. And under the uniform guidance, one of the allowable cost criteria is whether the costs are reasonable and necessary. So, for example, if you as a tribal government are providing a large amount of assistance to individuals that someone, from the outside may question whether this was the amount of assistance provided was reasonably proportional to the harm that they experienced due to the pandemic, you may want to have more documentation. So, for example, a survey or a policy as to why you're providing more. So, the larger the dollar amount you provide, maybe more documentation would be better for you. So, in addition to assistance to individuals, Treasury also clarified that you can provide assistance to tribal businesses, specifically small businesses, which are generally considered to be less than 500 employees, and non-for-profit organizations that are either operated by tribal governments or operating on tribal lands are also presumed to be disproportionately impacted, which means that if you provide assistance to these small businesses or non-for-profit organizations, you don't have to justify why you're providing this assistance, but you do again need to justify the amount of assistance provided, that making sure it is reasonably proportional to the negative impact they've had. So what this does by Treasury in the final rule clarifying that these individuals or communities or businesses have been disproportionately impacted by the pandemic, it just reduces the justification on the tribal government and to have to justify why you're providing this assistance. So in addition to small businesses, Treasury also said that you can also provide assistance to tribal development districts. And the way they define that is development districts are commercial centers for tribal hospitality, gaming, tourism, and entertainment industries. So that would include large tribal casinos, hotels, RV parks, golf courses, and other such enterprises. Under this assistance, you're not limited to just providing assistance to small businesses. It can also be, it can be more than 500. It can be assistance to businesses that have more than 500 employees. The requirement is that these businesses had to be operating before the pandemic, and they were affected by required closures. We know that every one of the tribal casinos were closed at one point during the pandemic, so they were affected by the pandemic. So Treasury has, they made this a little more lenient by saying that yes, these industries can receive assistance from tribal governments, and they would be considered beneficiaries. And later on in the compliance section of our presentation, we'll be talking about how the fact that they're considered beneficiaries means that they would not be subject to single audit. So some best practices on providing assistance to businesses. You can, of course, use the government services criteria if that is, if you are able to provide assistance under the government services provision that Tasha went over, or you can provide it under these other criteria that I just went over, either tribal development districts or assistance to small businesses. And you can also provide it to other businesses that were impacted industries. Now, Treasury didn't put in a comprehensive list of every industry that was impacted. So if you identify an industry that was impacted by COVID that wasn't included in the final rule, they did provide a simplified test where you would, if you find that an industry or a business had experienced at least 8% of employment loss, they would be considered an impacted industry. And that 8% employment loss is related to, must be in response to COVID or as a result of COVID. And even other eligible uses that Treasury has listed in the final rule, if there are other eligible uses that aren't in their list that they provided, if you identify that there is a specific need for a household, business, or other organization, you can identify that need and design a response to provide assistance to such an organization or business, and that is, again, reasonably proportional to the harm that was caused by the pandemic. In addition to individuals and businesses, the Treasury also updated their final rule to be provide a little more flexibility on using these funds for payroll. What they've said is that tribal governments can increase the number of employees that they have up to 7.5% above its pre-pandemic staffing levels, which is great for, tribal governments are operating a lot more programs now, dealing with a lot more funding that they've received. So you're allowed to use this funding for that, up to 7.5% to increase your staffing levels. You can also use this funding to to provide pay to those employees that had pay reductions and furloughs to basically making them whole because they experienced this if they experienced pay reductions or furloughs during the pandemic. You can also use payroll to maintain your current compensation level to avoid having to do layoffs. And then there's this worker retention incentive to employees that they've added. And in that, what they're saying is that you can provide employees to retain employees. As you all know, there's employee shortage everywhere with the Great Resignation and Great Reshuffle. So they put some caveats on this worker retention incentive. It can be used for, if you provide incentives, it needs to be less than 25% of their base pay or 10% of the group or category of employees' pay. In addition to this requirement of worker retention incentive, to avoid tribal governments or all governments from just providing a flat increase to all employees, they do require some sort of documentation showing that an employee who received another offer and they're going to leave, and because of that, you increase their pay for worker incentives. So there's some restrictions around that. But they did update this to make it a little. They opened up the payroll requirements a little bit more compared to CARES CRF funding. Now, the one area that I thought the final rule made their requirements more restrictive is their capital expenditures. So what they've said on capital expenditures is that all expenditures, and when you're using ARPA funding, must be related to and reasonably proportional to the harm caused by the pandemic. So because they've added this requirement that it must be related to, which was probably a no-brainer, but also that it was the amount of expenses that you have must be reasonably proportional to the harm caused by the pandemic, that's going to result in, maybe if you all have a lot of capital expenditures already planned, you may want to reevaluate whether these are still allowable under the final rule. And if you already started certain capital expenditures, Ryan is going to go over what that means on the compliance section of what that means if you've already started it before the final rule came out. But what Treasury is saying under this capital expenditures is that they provide an example that if you're constructing a new facility primarily for the purpose of mitigating the spread of COVID, that would generally not be considered a reasonably proportional response to being an eligible use of this funding, because what Treasury is saying is that you can probably make other improvements more quickly and more cost effectively rather than constructing a whole new facility. So that's one of the examples that they provided in the final rule. However, they do say that you can continue to use fiscal recovery funds for certain capital projects that they're saying are absolutely allowable. So, for example, testing and lab equipment, emergency operation centers, affordable housing, child care facilities, schools, health clinics, job and workforce training centers. The one thing that they did say is that governments have to provide this written justification if they spend over $1 million for capital expenditures. However, tribal governments are not required to fill out that written justification. But you do, like I said at the beginning, I mentioned at the beginning of this when I started talking, you still need to justify that the amount of expenses are still are reasonably proportional to the harm caused by the pandemic. So you'll need to maintain some documentation as how this was in response to the pandemic and how it was reasonably proportional, but you don't need to do a formal written justification that other governments will have to do. And now Ryan is going to go over the other eligible use criteria.
Thanks, Anita. Nice to be with you all. I'm going to talk next about premium pay. Here. Let's start this off with a polling question, Amy.
All right, thank you. This one should be pretty quick. Can you provide premium pay to eligible employees retroactively dating back to 2020 under Treasury's changes in the final rule? A, yes, or B, no. And then while you're responding to that, I do want to let you know that if you want a copy of today's slides, you can get them from the folder that says slide deck and handouts. And then we're also sending them via email tomorrow, along with the recording of the webcast.
Thank you, Amy. I think this is a good question to just kick this particular part off, just to kind of gauge everyone's thoughts of whether the March 3rd, 2021 beginning date of the performance period, to get a sense of how many understand some of the exceptions that apply there. So. Yeah, good, thank you. So yes, you can. Again, this is, there's a few exceptions we'll talk about that you can apply fiscal recovery funds prior to March 3rd. And this premium pay program is one of them. So if you answered yes, you are correct. So with the premium pay and the changes in the final rule, there really wasn't significant changes, okay? But there are some clarifications that I do want to highlight here real quickly in case you're considering such a premium pay type program. One notable clarification was that part of their definition of eligible workers, they did emphasize in the final rule that tribes and tribal enterprises are included in the definition of an eligible worker. Clearly with tribal governments, I don't think there was a concern, but there was a lot of questions about whether tribal employees of tribal businesses would meet that same criteria, and they do. So that's great. As I go through premium pay, I do want to provide this reminder that if you're seeing that potentially your tribe wants to implement such a program, but maybe some of these rules are a bit restrictive, there are other sections within the guidance that might be more beneficial for you, right? So we indicated here, and as Anita talked about, there's that worker retention incentive program that you can also provide to teleworkers. And also too, I've heard of some tribes that want to offer a premium pay program, but they want to do it under their governmental services amount that they have reserved for that. There's pros and cons of doing it that way, but ultimately, there's other areas to potentially reimburse workers for such pay. I want to be clear about that. So let's just get right into it. I know it's a bit wordy on this slide, but I do think it highlights some of the key allowable items within the premium pay guidelines, which I want to start here and talk about that first, the stuff in green. So when you see this, I'm going to talk about this. Everything that's highlighted in red are the clarifications or changes made in the final rule. All right, so I already talked about one. This can only be paid out to eligible workers, which also now includes tribal businesses. On number 2 here, an eligible worker must also be performing essential work. And they do define essential work within the guidelines. It's either some type of regular personal interaction with the public or some type of physical handling of other items handled by other people. Okay. On 3, we talked about this already as well. It can be provided retroactively from the time since the pandemic started. And on number 4, this wasn't a clarification or addition to the final rule. You can provide premium pay to part-time workers. Number 5, you can also provide grants to eligible employers that have eligible workers who perform essential work. And then on number 6, this one was an interesting addition in the final rule, but essentially they want, and they've been very clear about premium pay, or you could look at it as hazard pay as well, just a different name, but they really want it to be responsive to the eligible workers performing essential work during the course of the public health emergency. And so some of the 3 categories that would be considered responsive is that if the employee or the eligible worker's pay is really below the wage threshold that the guidance clarifies. I'll talk a bit more about that. Or if the worker is not exempt from the Fair Labor Standards Act overtime provisions. So essentially, if that worker is eligible to receive overtime, that worker can also be eligible to receive premium pay even if it exceeds the wage thresholds. So the Treasury acknowledges in the final rule that adding this particular element will provide much more flexible uses for distributing premium pay to eligible workers. And then finally, though, if you do have employees that do exceed the wage thresholds, but are not exempt from those overtime provisions, then you would have to provide a written justification to Treasury to make sure everything was fine. All right. So those are the allowable things. Now, the areas where I would caution you if you are implementing this program, number one, essential work by the definition of Treasury is not performed while teleworking. So remote employees, that would not be eligible under here. Number two and three, I'm going to cover both of these just to get through this pretty quickly, but you can't award this to volunteers, and that was clarified in the final rule. And they do, I think this number three item is a bit of an interesting clarification, but essentially you can't use the fiscal recovery funds to reimburse perhaps the general fund. Maybe the tribe paid for premium pay in 2020 or 2021, and they did it out of the general fund. You can't go and say, okay, well, now we're going to go ahead and just simply reimburse the general fund for paying that premium pay. That's not allowable. It has to be a new cash outflow per the rules. And then these wage criteria, not anything new here, right? I mean, except for what I mentioned previously about those particular employees that are eligible to receive overtime. But essentially, the premium pay generally cannot exceed $13 per hour or $25,000 in the aggregate. And you have to also consider the employee's wages in comparison to the state or county's average annual wages as well. So if it exceeds 150% and that employee is exempt from the overtime provisions of the FLSA, then you would have to submit a written justification to Treasury to make sure you can still continue to pay those employees premium pay. Finally, the last thing I'd caution you, they did highlight this in the final rule that the conflicts of interest policies do have to be in place. So in this particular section, they do mention that items that are prohibited, for example, are for elected officials steering funds to projects in which they might have a financial interest or using these fiscal recovery funds to pay themselves premium pay. So anyway, that's you know, an interesting clarification, but just you want to make sure that when you're subject to audit, having those conflict of interest policies in place are going to be key. All right, and keep your questions coming. I know we've had a lot of great questions. Please do submit if there's anything that you need clarified. But I'm going to jump right into infrastructure. And I know we're always going, when we talk about infrastructure, clearly a very detailed conversation and somewhat confusing in the way that this is organized in the final rule. But when we're talking about a tribe funding an infrastructure project with this money, we could either go down the road of a governmental service, right, that we've talked about, which, you know, provides much more flexibility, which also too is you'll see the benefit of having it under the governmental service. I'll talk a bit more about that here shortly. But most of the conversation that I'm on now is really going to be on this section here. I'm going to just really talk about the requirements that apply just for the investment into water, sewer, and broadband infrastructure. That's going to be the focus here. So the first thing about infrastructure is the expanded reporting requirements. I'll clarify. This does not apply to those infrastructure projects that you're funding with your lost revenues, your governmental services bucket, okay? Again, we're focused just quite simply on those other eligible criteria. And so if you do have a infrastructure project that's going to be over $10 million, in the reporting portal, and likely if you already have these infrastructure projects, you probably had to go through this in the Treasury portal for that report that was due at the end of January, but I'm just going to clarify that a bit more here as well. You will have to provide significantly a lot more information about certifications on employees, labor standards, et cetera. So if you haven't completed a Davis-Bacon certification for this particular project, that's fine, right? Because Davis-Bacon is not, it's not a compliance requirement for these funds. However, you will need to provide additional information about employers, contractors, and subcontractors working on the project. And then as well, the second bullet here about providing certification for certain labor agreements, and then certifying as well that the project is has sufficient supply of appropriate skilled and unskilled labor. I'll talk a bit more about what that means later on in our compliance section. And continuing on, for additional reporting requirements, if you do have projects, water and sewer projects, in that report, you're going to have these two bullets that I have here for the permit number and the ID number. You will have to include that in your reporting as well, so make sure you have that available. And then for broadband projects, you will need to confirm that the project will meet the 100 megabyte download threshold and at least the 20 megabyte upload threshold as well. Those are some of the key requirements in the rules here. But if you're not able to certify that, you would have to explain why that's not the case. Treasury has expanded their definition of what they consider to be a necessary investment in infrastructure. So really, it kind of comes down to these three things, which makes sense. They really want to make sure that the project is going to achieve or maintain an adequate minimum level of service. Obviously, no gold-plated pipes, et cetera. They're just trying to find ways to not to exceed the plan for such an infrastructure project with this new funding, as well as ensuring that there's some cost-effective means and taking into consideration all the alternatives that could be applicable as well. And then any projections that are needed for your project, perhaps with maybe a drinking water, supply of drinking water project, those projections that you need to include in the project to meet population growth, you would need to support that, right? Those projections need to be sustainable over the project's estimated useful life. And real quickly, a couple more clarifications here. The Interim Final Rule did provide clarification previously that private sources, that these infrastructure projects, they wouldn't expect them to be funded by private sources as well. They've taken that out of the final rule. So essentially, you can have a project that could be funded with private sources as well that's funded with this ARPA money. And finally, they do emphasize as well that for contracts in excess of $100,000 that will be applied to these infrastructure projects, you must have some type of compliance provision within the contract to ensure compliance with the Contract Work Hours and Safety Standards Act, which ultimately is just providing safe working environment for employees. It's addressing certain labor standards, et cetera. Including that in the contract would be necessary. And I won't go through the detail here, but the projects that were broadened during the final rule are mentioned here on the slide. So if there is something here that your tribe is considering, and we don't have enough time to talk about this now, please reach out to us. We can give you a little bit more of the basics and understanding of what's going on there. And regarding broadband infrastructure, it did provide a bit more flexibility to tribal governments as well. So if you have a project where you lack access to reliable high-speed connections, lack of affordable broadband, lack of a reliable service, it can be allowable for your tribe if those cases are in fact in play. However, the project must be designed to meet those high-speed standards, and we talked about that, starting with a download speed of 100 megabytes per second and starting with a upload speed of 20 megabytes per second. Now, for tribal governments, if you are going to continue with this or pursue a broadband program like this, you would need to ensure that your service provider is either participating in the FCC's Affordable Connectivity Program or provide access to some type of very similar affordability program. Those programs are essentially providing a benefit to those households that can afford that can't afford the broadband and need it for work, school, or healthcare or other purposes. So just factor that in as well. All right, we're going to jump right into compliance here. Let's start this off by this question. Amy?
All right, so our last polling question, what is your biggest compliance concern with using SLFRF? And your options are below. And once you've completed all CPE requirements, you will be able to download a PDF of your certificate right from the CPE progress window.
A lot of stuff here. I would expect most of these are probably things that you're concerned about. In my view, when Treasury releases a 400-page document of rules and compliance, yeah, it's probably a little bit of everything that we're concerned about.
All right, it looks like most have responded, so here are the results.
Reporting is number one. I can understand. I think too the reporting for ARPA, if you have government services, if you're able to apply all your fiscal recovery funds to government services, the reporting is actually very simple. But that's probably not the case for most of those people that answered that question, right? So hopefully that they did improve it compared to the grant solutions and for the CRF reporting. If you have a lot of projects or subrecipients, you're able to upload those materials. But if you do have problems with the reporting, if you need to reach out to Moss Adams, let us know, because we can maybe do a walkthrough on a Zoom call with you to see how maybe we can help. All right, so let's go through these restrictions on use here. So this really applies across all eligible use criteria. And this also is part of the government services. You can't use this even for government services. These funds cannot be used to fund debt service. You can't use it to fund a rainy day fund. You cannot pay settlements or judgments with this money, or you can't fund any projects that violate any of the ARPA rules or regulations. Treasury did emphasize in the final rule that if you're considering, again, we're not talking about government services, but we're talking about the other like general economic or workforce development provisions, that these funds should not be used to design assistance programs that are just simply there to grow the economy or enhance opportunities for workers. There has to be a connection between the assistance provided and the impact to individuals during the course of the pandemic. All right, so just keep that in mind because Treasury did emphasize that. Under the Davis-Bacon reporting requirements, like we talked about before, this still does not apply to the fiscal recovery funds. But if you're not following Davis-Bacon, and again, if you're having to report on infrastructure projects over $10 million, you would have to include the number of employees of contractors and subcontractors working on the project. Those other employees that were hired directly through a third party, those wages and benefits of workers on the project by classification, and whether those wages are at rates less than those prevailing. So that you would have to provide that additional information if you're not following Davis-Bacon. I guess I would call this Davis-Bacon light, but I don't know if that's what the intent was. And so I did want to talk about this period of performance. Just to clarify, there really wasn't any significant changes to the period of performance. Actually, really, it's staying the same. The period begins March 3rd, 2021, and you would need to obligate funds by the end of 2024 and spend those out by the end of 2026. The bottom line, that really hasn't changed. But I think, too, what we have here on this slide is those particular areas where perhaps it's deviating from the period of performance. We talked about a few of these, but if you are providing assistance to households for rent in arrears for preceding months prior to March 3rd, that's allowable. We talked about the premium pay for the retrospective work performed at any time since the start of the pandemic. You can use fiscal recovery funds to cover the costs for those eligible infrastructure projects that were planned prior to March 3rd, but those project costs cannot be incurred. Those project costs could only be covered for the costs that were incurred after March 3rd. So just to be clear, the infrastructure project, we initiated it, or it was planned to start prior to March 3rd. That's eligible, but those costs have to be incurred after March 3rd. Okay. And then finally, if you're going to provide grants to your businesses or to small businesses or to other external businesses as well, and you provide that grant subsequent to March 3rd, 2021, that grant can be used to fund costs prior to March 3rd. Okay, it really is, the incurred period is really about when that grant was initiated by the tribe between that business. Okay, so just to be clear, that's one of the exceptions as well. Finally, when we're talking about following these rules, we have the interim rule, and you follow those interim rules until March 31st. You can either follow the interim rule or the final rule, but after April 1st, you really need to start following the final rule. Now, that's going to be significant here because in a lot of cases, you might have taken significant steps for a project that was initially allowable under the interim rule, but maybe changed during the final rule. So you can see here that Treasury does allow you a bit of a grace period. For example, like Anita mentioned this previously, some of the capital expenditure restrictions are much more vast under the final rule. So if you had initially funded or planned to construct a community building that was for gatherings because the previous building was too small and it didn't allow for proper social distancing or other mitigating efforts, then that was allowed under the interim rule, but it's getting a little bit more squishy under the final rule. But if you've taken these significant steps, then it's still allowable. And last question here, the applicability of uniform guidance. Does the uniform guidance apply to the fiscal recovery fund? Yes. All sections apply. There are some minor exceptions, like earning interest, for example, that does not need to be remitted back to the Treasury, and it does not. So that's one of the exceptions. There's a few others as well. And also, too, this distinction of beneficiary versus subrecipients is something that they emphasize in the final rule as well. Anita, do you want to cover that real quick?
Yeah. So thanks, Ryan. So the difference between subrecipients and beneficiaries boils down to the purpose of why you're providing funds to an entity. So if you're providing, as a tribal government, if you're providing funds to an entity to carry out a program on behalf of the tribal government, then that entity is considered a subrecipient, and they would be subject to the Single Audit Act if they spend over $750,000 of these funds. But if you are providing funds to an entity and they're the end users of these funds because you're providing it to them because they've experienced harm due to the pandemic, then they would be considered beneficiaries. So for example, if a casino had closures during the pandemic and you're providing, as a tribal government, you're providing assistance to that casino to use funding because they've had negative economic impacts of the pandemic, that casino would be considered a beneficiary and would not be subject to single audit. They would also not be subject to subrecipient monitoring and reporting requirements either. That's the difference between those two. And then you all probably already know this, but the Federal Assistance Listing Number, which previously used to be called CFDA number, is 21027 for these funds. Treasury has indicated there will be FAQs that will be coming out on the final rule, and they codify this guidance under this website that you can see here under Title 31, Part 35. We unfortunately ran out of time for Q&A. We did respond to a bunch as they came in, but we will follow up with an email for the questions that haven't been answered. Amy?
All right, thank you. And thank you, Anita, Tasha, and Ryan, for a great presentation today. And unfortunately, we are out of time. But before we close, I want to remind our attendees that we have a lot of resources available on our website. We have linked a few of them directly in your console, so definitely check those out. We also have a GASB 87 lease webcast coming up in the next quarter, so please stay tuned for more information on that. And if you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 3 weeks should you have difficulty downloading it now. And finally, here is a link to an online survey for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. And thank you for joining our webcast. Take care, everyone.